All right. Good evening, y'all. My name is Mr. Ransdell. I go by Mr. R to my students. I am a math teacher at Energy Institute, and I'm going to talk to you today a little bit about taxes. The arch nemesis of all peoples. In particular, today we are talking federal taxes. I'm not going to get into the super nitty gritty about the the whys of taxes. And I'm going to be talking from the perspective of paying taxes in Texas. Okay. So every state plays the game a little bit differently. Some states have state taxes and state income tax. For example, I lived in Colorado for a few years, and they have state income tax, which sucks. But I mean, in Texas, you don't pay income tax, you pay property tax. So there's a lot of different ways to get taxed out there. You need to be smart about where you go and where you move to, about or what taxes you have to pay. And exactly how that works. But a lot of the stuff I'm going to talk to you about and show you today will apply whether you're working in Texas or working in Nebraska or New York or Hawaii. A lot of this still applies, and in all of those places, so long as you live in the United States, federal taxes will pretty much always look the same. So that's going to be what we focus our attention on today. These are the ones that tend to scare people the most because everybody's afraid of the giant IRS hammer coming down on them. So we are going to talk a little bit about taxes. Now, linked in your hub assignment, you will see a link to this page. This is created and curated by the IRS, and they literally call it Understanding Taxes, and this is the student side of it. There's a teacher side of it, all of which is available to the public. And it has a bunch of little tutorial sessions on what everything is and how you deal with it, okay? And they give you information, and then they also provide you with like little checks for understanding to make sure you get what's going on. So this is a really good place. Like if you wanted to come and like basically look into things and like ask like, well, what do I do about this? I mean, frankly, most of your questions, a quick Google will answer. However, if you wanted to get a good like 30,000 foot view as to what's going on with taxes, this page, whoa, that didn't work at all. This page is a pretty good place to check out and get some good information about just what everything is and answering questions that you might have. So there you go. I might bounce back to this from time to time as we're talking today. We'll just have to see. But the first thing that we're going to talk about and the first thing that we are going to work through is the W-4. Now, the W-4, a lot of you have probably already filled this form out, and you might not even remember that you've done it. A W-4 is you'll see here, it's called the Employees Withholding Certificate. This form is used by far the most often for setting up when you get hired by somebody. And it's usually for a standard job, whether hourly or on salary, where you are paid a flat rate for providing some kind of work. So, whether you work at McDonald's or you work like me for a school district, or when I worked for an HVAC, I was a W-4 employee. You'll hear that term a lot. A W-4 or a W-2, we'll talk about that. A W-4 or W-2 employee will always fill one of these out as soon as they're hired. It'll be a part of your welcome to the club packet where you fill this out, and you see here it gives you instructions. Complete it so that your employer can withhold the correct federal income tax. The way this works is, what this document tells your employer is how much money they should withhold so that at the end of the year you shouldn't owe any taxes, or maybe the government even owes you some money back. That's kind of neat, isn't it? So this is literally preemptively paying your taxes by withholding a certain amount of money from your paycheck. This isn't actually paying your taxes. That happens when you file at the end of the year. This is just withholdings. This is literally putting money into a giant government savings account and basically saying, this is holding so that I can pay my taxes with it, and I am ensuring that I won't do something stupid with it and not have money to pay my taxes at the end of the year. Okay? That's what this is. All right? So filling it out is really not that difficult. Okay? You're going to see here these first 1, 2, 3, 4, 5 boxes. Super simple, right? You're going to do your name, and this is the actual W-4, by the way, and you are going to be filling this out with me. So if you go to the assignment page, you can follow along with me, and you can do this, and then I'll show you how to print it so that we can grade it. Your teacher can grade it. But you're literally just it is what it is, right? It says first name and middle initial. So you can type in Daniel T. All right, that's my first name and middle initial. My last name is Ransdell. Okay, my social security 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, I'm not giving you my social security number. But your social security number should be a, let me do math, 9-digit number, right? Usually on your social security card, it's separated by these little hyphens like that. So it's 3, 2, 4 sequence. If you do not have a social security number, for whatever reason, that puts you in an entirely different situation. I'm not going to unpack that entirely. There are scenarios where you won't have a social security number, but you still pay federal taxes. If that is you, you need to seek professional tax help. Okay? I'm just going to say that right now. Go find a tax guy or gal and have them help you do your taxes or sort out what it is that you need to do. Okay? You put in your address, 1, 2, 3, 4, Walnut Lane, not Lant Lane. And the city is Houston, Texas, 77777. I don't know, just whatever. So, all right. So, and you guys don't have to give us your actual address if you don't want to, but I mean, just FYI, we can look it up in the system. So it's not like you're hiding anything from us. But anyways, just fill this out with what would be pertinent information, right? But do put your name, correct first name and middle initial and last name, all right? And this is legal. This is legal. So not, Billy Bob Johansson, all right? This is your legal name, okay? Not, Unicorn Slayer 52. No, this is your legal name as it appears on your government identification, such as a driver's license, okay, or passport. Or just ID if you don't have a driver's license yet. But any government-issued ID, that's the name that goes in here. So there you go. The first question you're going to hit is question C here. Now, for a lot of you, I'm sure, right out of the gate, you are going to classify as single, all right? That means you are not, in the year that you are filing taxes, so this one would be for 2021, all right? In the year that you are withholding these taxes, you are not married or in a common law marriage. Texas has common law marriage. If you don't know what that is, Google it. Basically just means that if you live with somebody long enough, you're married. So if you are single, okay, if you are filing as single, this right here is the highest tax withholding rate, okay? Single, or you'll see it also says married but filing separately, which means I'm married, but we're treating ourselves like we're single, okay? This is the highest withholding rate. this top box, highest withholding rate. Okay? That means that they're going to hold the most amount of money that they can if you check this box. All right? For the sake of conversation, I check this box even though I am married and we actually file jointly. Okay? You don't have to select whatever one you actually do. All right? However, you should never check one that's lower in tax rate than what you think you'll pay. So what does that mean? That means if I am single, all right, if I am single, I should not select married filing jointly because that is a lower tax withholding. And there's a very good chance that at the end of the year, if you check this, but you're actually single, you will owe taxes, which isn't fun. But there's a good chance that if you are just a normal average Joe person making less than $72,000 a year and you select this box, you are almost definitely going to get a refund on your taxes, which is a much more pleasant thing to have happen in the summer or May than to have to owe government more money. All right. So as it goes here, every box you go down, you pay a little bit less money. Your rate goes down. Okay. So I always withhold the maximum amount, which means you check the top box, and there'll be some other things we talk about later, but generally speaking, you check the top box. That starts you at the highest withholding. All right. Which helps to protect you from owing taxes at the end of the year. A lot of people will argue, well, you're loaning the government money. Yes, you kind of are. But to date, they've been pretty good at giving you back. So there's no reason to not trust that process for now. All right. So if you have questions about which one of these you think you are, this site has a little piece on, let me see, where is it at? It might be this one. Where is it? It's not on here. I thought, oh, there it is, filing status, module 5. What is the difference between married filing a joint return and married filing a separate return? Okay, so it's a whole thing on filing status. So if you, and that has to do with the difference between married and whether you're filing a joint or separate. Okay, but just again, a piece of advice: you don't have to do the one that you technically are. You just should never take a lower rate. Just don't do a lower rate. I think that's unwise, but that is also up to you. You can take that risk if you want to. This step number 2, this is a multiple jobs thing. All right. If you work multiple jobs or your spouse has a job as well as you, which is pretty common for married folk these days, for both people to have jobs, and both of you are W-4 employees, all right, you have to take this into consideration. It has pretty clear instructions. It also has a link to an estimator, which is pretty helpful if you are in this situation to get an accurate withholding. If you are married and filing jointly, okay, you have a lower tax rate, and it's based off of a calculation between the higher income and the lower income, and they do some numbers to decide how much taxes you're going to pay. It tells you on here you can do one of these things, one of these 3 things, to calculate what your withholdings would be. And you'll see here it says on you can go to step 4C on page 3. I'll show you that as we're cruising through here. But this again doesn't apply to everybody. If it applies to you, this is something that you're going to want to have to do a little bit of homework on. And it's honestly not that big of a deal. And again, if you do single and filing separately as your withholdings, this isn't a problem for you because you're going to withhold way more than you need to. And if both of you file this way, if both of you file singled and filing separately, you should not owe any money at the end of the year. And in fact, you'll probably be owed some. So a pretty reasonable amount too. So, that's the safe play. If you're wanting to try to be as super accurate as possible, you'll want to go through step 2. So that's step 2. So step number 3 and 4, this is where deductions and dependents come into play. All right. And there's a lot of debate on how to do this. Okay, I do not claim, for example, my children. I have two. I technically qualify for $4,000 in dependent deduction. Okay, I, however, do not claim it, and I have my reasons for that. It's because I usually owe taxes at the end of every year, so by not making this claim, it makes me owe less taxes. Okay. So I don't claim it here. I claim it elsewhere, and I'll show you that in a second, but I don't claim it here. Okay. So you have that choice to make, right? You'll see it says multiply the number of qualifying children. Yes, there are situations where they don't qualify. If it's your blood child, they live in your house, and you pay for their existence, then they qualify. If it's your legal child and they live in your house and you pay for their existence, then they qualify. There are also situations where children live in your house that are not yours legally, but you pay for them, where you can still get this deduction. Okay. Other dependents include elderly and disabled. And you can get those dependent deductions here as well. And then down here it says add the amounts above and enter the total here. So you're going to come down here. Let's say, I did say I'm going to take my $4,000, and let's say, grandma moves in with me and she needs some help from me, so I claim a $500 deduction there. I would say right here that I'm getting a $4,500 deduction. You put here what is relevant to you, but most of you don't have it. And I would say approach this like you're doing it seriously, and you're actually filling out a W-4, because that's beneficial. It's good practice. Okay, so if you have kids to that you need to claim them. If you don't. All right. If you don't want us to know, don't put anything there. Step 4. This one obviously says it's optional. This is getting other adjustments and by adjustments, this means adjustments to your income. And I'm not going to get into the ins and outs of this, but what you're doing with these numbers in step 3 and 4 is you're adjusting the taxable income. All right. So if you say, like, I make $53,000 a year, this adjustment right here is taking $4,500 off of that income. So I'm actually going to be taxed now for $49,500. Okay. And everything that we do down here is also going to adjust the amount of income that is being taxed. Now, every time you do that, you're lowering your withholding. So again, if you want to be safe, maximize your withholdings. But if you have dependents, you're going to get that deduction. So taking it now isn't a bad idea. But at the same time, it's your call. You will not get punished for having a larger tax withheld. So not putting any deductions in is a safe play. All right. But if you put in a bunch of deductions and you're wrong, and you don't have the money at the end of the year to pay for it, now you're in trouble. Okay? So you need to look at, and this goes into budgeting and all of those conversations about what's right for you. But if you're of the mindset of, I'd rather be safe than sorry, then don't take any deductions unless you are absolutely certain that you qualify for them. All right? So kids are a safe bet. Other dependents usually are a safe bet, and you can look at what qualifies for that. And we'll talk about deductions here in a second, but that's just to be aware. If you maximize taxable income, you will minimize your chance of getting caught at the end of the year. Other income, not from jobs. All right. So you'll say, this is saying if you want tax withheld for other income, that don't already have withholding, right? So, let's say dividends is a big one. So let's say you have some investments and they pay out dividends annually or quarterly or monthly or whatever. That is usually untaxed income, and you probably need to account for that. Okay. Now, a lot of times doing it here doesn't always pan out. It just depends. If you're in a situation where you are earning enough interest, dividends, this retirement's obviously not going to be any of you guys. If you're earning enough interest or dividends that this becomes a concern for you, that A becomes a concern for you, you need to consult a tax person. All right. If it's a small amount of money, if it's like, if it's like, oh, I'm going to, I'm going to make, $2,500 this year from dividends. That's not that much money. And you're not like killing yourself by putting this in here. But if you're like, I'm going to make $250,000 in dividend and interest income, you need a tax person. Okay. So just be smart about what you do with 4A here. Because you could put a number here that results in your entire paycheck being withheld. So don't do that. Instead, wait and talk to a tax professional if you think you need it. But if you know, like, I'm working one job and that's all I'm getting, and maybe you have a savings account that earns you a little bit of interest, don't worry about that. You can claim that at the end of the year. If you don't see any other, like, for sure income for you that year, don't put anything here. Deductions, we'll talk about deductions here in a second, but most of us aren't going to be making anything other than what is called the standard deduction. And if you take greater deductions, you are reducing your withholding. And again, like I always have been saying here, extra withholdings are not a bad thing. All right. So it's okay to take a greater load of withholdings now and get a refund later. But if you're not that kind of person, if you want to be accurate and try to withhold the exact amount, then you can calculate this and figure out what number should go here, and I'll tell you what there. I'll show you how to do that in a second. And then extra withholdings, this is just you saying, I want you to withhold, and this says each pay period, so you're telling your employer each pay period, I want you to withhold an extra $50. Okay? If you've done a whole bunch of deduction work and you're like, I want to play it safe, I'm going to withhold an extra $50, that's fine. That's up to you. Again, just know what you're doing. You're giving the government a loan. You're saying, here's $50 a pay period, every paycheck. Be nice with it. Don't buy too many weird toys. All right, just do what's right. Okay. After you've done that, you will sign it. This is usually has to be done via either an e-sign, which this documentation doesn't support, or you have to print it and sign it. And that's it, guys. That's a W-4. Okay, that's a W-4 filled out. All right, and your employer is going to take that information, throw it into their system and into their payroll system, and it's going to automatically deduct the correct amount of taxes from your paycheck. Not that big of a deal, right? It's automatic. You don't have to worry about it after you filled this form out. You update it every year if necessary, or you just say, nah, whatever. I didn't update mine this year, even though I had a child and would qualify for a change. I'm not claiming that deduction because that helps me in the long run. This is the worksheet for multiple jobs. All right. It is partially done here, and then there's some tables down here. This is what I was talking about. So like this left side over here is the higher paying job. So like let's say you have a doctor wife who's making $175,000, and you working at McDonald's is making $22,000. You guys are at a $6,500 withholding. Okay. Whereas if you were single in the same situation, so if you're single or married and filing separately, all right, and she's making, whatever, that 170 grand or whatnot, and you are making, what did I say, 170? I think I said 175, which actually technically puts you in this one. And then you're making your 22. Now you're withholding $7,500. It's another $1,000 a year. See, so the single rate is higher. And when you're doing multiple jobs, it's higher still. Okay. So, and then that gets broken up over the course of all of your paychecks. Okay. So you can use this worksheet to help you figure out the multiple jobs thing. And then when you're done, this last thing that you get down here goes into step 4C up there on your W-4. The only thing your employer cares about for your W-4 is this first page right here. They're not going to want to see the rest of this. So the rest of this is instructions. It tells you how to do things. There's stuff in here. There's very detailed instructions in here that help you to know what to do. Okay. This is all just to help you. Okay. So this right here is probably the only thing that's pertinent to most people, and that's your deductions worksheet. So if you're going to itemize your deductions, you probably need to get a tax person. All right. Even if you just take like the cheap tax person on the internet, which I'll show you what those are. When you're itemizing your deductions, you're probably going to need some help with that. It is very possible to do. Like I do my own itemizations every year. It's once you've seen it done once or twice, not hard. But your first time that you have to itemize your deductions, might need to talk to somebody. But these deductions you'll see here, if your interest on a home mortgage, charitable contributions, if you pay state or local taxes, which includes in Texas, if you pay property taxes, if you own a house, those are all deductions. Okay. And then if you have medical expenses, which are in excess of 7.5% of your income, you can deduct it. All right. Then there are standard deductions here. And then so it says here, if line 1 is greater than line 2, all right, anyways, the instructions are very clear. Okay. So this is standard deductions right here. That's what this little blob is. These are your standard deductions. And then they're comparing your standard deductions with what you're claiming as itemized. And if your itemized is greater than your standard, then you get to claim that itemized deduction over your standard. If your standard is greater, nothing changes. Okay. So there you go. Again, here's more stuff for you to get deductions. It's a part of an itemization process. If you are having to go through this process the first time, hire somebody to help you. Okay? Hire somebody to help you. I highly recommend it. At least the first time. But if you're but that's going to be I'm talking about just maybe one or two of you. Most of you aren't going to qualify for that. Most of you, standard deduction is fine. Especially for a W-4. Again, this is just withholdings. Maximizing your withholdings, not a bad idea. Getting your taxes right at the end of the year, much more important. All right? Go ahead and take a break. Fill out your W-4, and then when you come back, we're going to talk a little bit about what you get at the end of the year, how to file your taxes. Okay, welcome back. We are going to wrap up our conversation here. We're going to talk about a couple of things. Kind of what the end of the year tax process looks like, and how to go about doing that. So this shouldn't take very long because, in all honesty, it is so easy if you're a normal person to do your taxes. Okay, so allow me to elaborate. So you filled out your W-4 at the beginning of the year. Okay, and that at the end of the year, your employer is legally obligated to provide you with what is called a W-2. And this is a very zoomed in W-2. All right. Now it might have different formats. Like my W-2, for example, comes in more of a vertical format and has four copies on the single page, but it has all of this pertinent information. Okay. I guess can I fill this out? No, I can't. Yeah. Oh gosh, that was loud. What comes on this is what your employer is providing to you and the federal government, saying this is how much money this person made, and this is how much we withheld in taxes. Okay. And you take this information, and then we will use it later to actually fill out and pay your taxes. Because this W-4, filling out this W-4, is not paying taxes. This is a withholding. Okay? When you get this document, this is your employer saying this is how much taxes was withheld, and it is withheld with the federal government. They have that money, okay? But until you file, that money has not been considered settled, okay? It is unpaid taxes, or I should say unfiled taxes. And what happens is if you fail to file, 1, felony, 2, they will just keep all of it. And if you're entitled to any kind of tax rebate or tax refund, you're not going to get it. So it behooves you to, once you get your W-2 from your employer, to then take that and appropriately file your taxes. Okay. Now, what is on this piece of paper? Well, what you will see is in box number 1 up here will be your actual income after deductions and adjustments. Okay, so box 1 will take into account all of the stuff that you put in step 3 and step 4. Okay, and it will have whatever that adjusted income is. So like I said, if I say I make, as a teacher, I make 53 grand a year, and I'm deducting 4,500, it's going to show 49.5 right here, 49,500, because I took a $4,500 adjustment, okay, or deduction, okay, and your federal income tax that is withheld is based off of that, and whatever you claimed as up here, okay, creates whatever this number is here, and this will be the total income tax that was withheld for you for that year. Okay. This number here, your Social Security wages, might be different than what your wages, tips, or other compensation says up here in box 1. If it is different, it's usually higher, and that's because it does not care about your deductions. Social Security is assessed pre-deductions or adjustments, so it might be higher. There are ways to affect that. That is above all of our pay grade. Okay. And then box 4 will say how much was withheld in that scenario. Box 5 should be the same number as box 3. Medicare is also calculated pre-adjustments. And then box 6 is how much tax was withheld for Medicare. Social Security tips. This is if you choose to pay extra to Social Security. Allocated tips. This is if you were paid tips through your employer. So let's say you work at a restaurant and you process a lot of tips via credit card, and then your employer gives you those tips at the end or in every pay. Your employer has to actually say, this is how much money this person made in tips. If you are paid tips in cash, there is a different process for claiming that. All of the automated systems we're going to talk about today can account for that. Okay. Dependent care benefits, that isn't going to apply to most of you, / pretty much all of you. And all of the rest of this is stuff that your employer should be doing. Okay. Your employer is going to fill all this stuff out. There is a litany. This is a 11-page document that explains all of this. Here's your e-file, document. It's the same thing, but it's formatted slightly different for e-filing purposes. We'll talk about that in a second. They're all right here. So this is explaining everything that's in there. I'm not going to break this down. If you want to read more about like what's going on in box 12, that happens right here. Okay, so have fun with that. This doesn't apply to most of you. Okay, and it won't for a while. Okay, so standard employees will see information in boxes 1 through 6. If you work at a restaurant, you'll see some, and you get tips, you might see something in 8. The rest of this will be non-consequential to you. You just want to make sure that your employer's name is correct, that your name is correct, that your address is correct. You want to make sure all that information is accurate on here. If it is not, that is a problem, and you need to talk to your employer about getting it fixed. If your employer's information is incorrect, that is a problem. You talk to your employer about getting it fixed. But here's one thing that I'm going to push to you guys that wasn't pressed to me when I was young. If you fill out a W-4 at the start of the year, you should see on every paycheck where there are deductions happening. Those deductions will be federal income tax or FICA, Social Security tax, Medicare tax. You should see these three withholdings on every paycheck. If you do not, you need to talk to your employer and figure out what in the heck's going on. Because I had a job when I was in college where I filled out a W-4 at the start of the year. I kept a copy for myself because I don't want to be insulting, but keep a copy for yourself, all right, as proof that you submitted a W-4 to that employer, and make sure you get one that has their information on it, okay, that is completed by them. You should, if you did a W-4, you should get a W-2 at the end of the year. I had an employer who I did a W-4 for. At the end of the year, they tried to hit me with a 1099. And I'm about to talk to you about what that is and why that should make you very mad. Okay? So if you fill out a W-4, oops, I hit a button. I have to wait. Okay. If you fill out a W-4, you should get a W-2. If you fill out a W-4, you should get a W-2. Okay? 1099s. 1099s now this is the 1099 miscellaneous. There are several different 1099s. They all accomplish the same thing. 1099s are the way that payers account for money paid to people who are not employees. So an employee does a W-4. If you are a contractor, so let's say you work in construction and you work for different companies all the time, you bounce around, go to job, you will get a 1099. Let's say you work for the same person, the same company, but you provide all of your own tools and transportation, you will probably get a 1099. If you are self-employed, and people, and you do different things for different people, you will probably get a 1099 from each individual, which really is terrible, but it can happen, okay? 1099s are generally what's used for what we call contract labor. So 1099s are a way of accounting for different, basically income that isn't from being an employee of a company. All right. Now, if you get a 1099, it's just a straight up, like if you've worked for like one or two groups or something and you get one or two 1099s, they're not that hard to deal with. You'll see on here, there is like other income is generally used for just like being paid something. If they withheld income tax, it goes there. Super duper rare. Rents, royalties, this is for specific things. So like, I'm not going to dig into that too much, but is there one that's not that color? There we go. Here's one you can actually fill out, because you can do a 1099 for other people. That's a whole other level that most of you aren't going to apply for, or aren't going to be. So this stuff, when you get it, what you want to make sure is that the numbers that are on here match what you have accounted for. Okay. So if you're not selling fish from a boat that you own, probably shouldn't have anything in box 5, right? Other income is what most of you will be qualifying as. If you're a contractor or whatever, you should expect to see some numbers in other income, and probably basically nothing else except for down here. Okay. So, and then all of this information on the left should be filled out. If it's coming to you, your name and information should be down here under recipients information. Tax identification number, it depends. Your payer should probably always have one. The recipient is hit or miss whether or not they will have one. And yeah, whoever is paying, so whoever has employed you, quote unquote, their information will be in the top. All right. Like I said, if you filled out a W-4 and you get a 1099, contact a tax professional and they will help you to fill out the forms to challenge that. That's what I had to do. Now, thankfully, my mom worked for the IRS and still does at the time, and she helped me out. Because I was a sophomore in college, I had no idea how to deal with that problem, and she helped me fill out the forms to make an appeal, and I won my appeal and got a lot of money back. Because if you get a 1099, your tax rate goes from somewhere in the like 7 to 12% range up to the like 18 to 33% range. Okay? They're going to want lots of your money. All right? And so if that happened, challenge that. Challenge it like it's going out of style. All right? And they were good about it. When I did it, they didn't bat an eye. I had an answer within a month, and I won my challenge. And I still had to pay taxes because my employer hadn't withheld, but I only had to pay my portion, and which saved me a lot of money. So that's a big deal. You need to do that. Okay. Last thing we're going to talk about is actually paying taxes, because in all of this, taxes have not yet been paid. They've been withheld. Your income has been accounted for. You may even have been told what you made and how much was withheld, but you haven't paid your taxes. That's the 1040. Everybody's worst nightmare. The 1040, nobody does this on paper anymore unless you have a goofy income or are very, very detailed with your taxes. Okay. But this is the document. It's 111 pages. It's so big that they give you some little tabs that I can jump around. Okay. It's a big thing. All right. If you're self-employed or have a business, you will have to go through the long process of a 1040. Hire a tax professional. Don't do that on your own, especially the first couple times you do it. Spend the money to get it done right so you don't get bit, okay? Because it's better to spend $1,000 on a tax person to help you do your taxes the first time than to get hit with a $5,000 fine at the end of the year because you mess up on your taxes. Hire a tax professional if you don't feel completely comfortable with what you are doing, all right? And $1,000 tax professional is for like that's the real deal. Like that's for if you have a business with a lot of paperwork and a lot of stuff that has to be dealt with, okay? For pretty much all of you who are here, especially the first couple of times you ever do taxes, all right? There's a couple ways that you can pay or file your taxes and actually pay your taxes at the end of the year. Way number one is you can actually just go, so you can Google online tax filing, okay? And ads are going to pop up first. The first actual link that's not an ad will be IRS's free file, do your federal taxes yourself, basically. Free file online, okay? You go here and you're going to be given two options. Do you make less than $72,000 or do you make more than $72,000? If you make more than $72,000, you have to file through the IRS, and it is free, but it's a little bit different. Okay? If you are less than $72,000, you can basically take anything that's out there and make it work for you and get it done. Now, that's not to say there's not options out there that if you make more than $72,000 that don't work. However, they stop becoming free. The only way you can do it for free is by filing directly with the IRS. Okay? Free to all is usually only available for those who make less than $72,000. Okay? So, and for most of you, your first job is going to be less than $72,000 a year. Okay? So, you're going to go here. You're going to choose an IRS free file offer. Oh, yeah. And you can actually go through and you can just browse offers. It tells you what you need. It says you need your income statements like W-2s or 1099s. You need your adjustments. You need your current filing status. And you need your dependent information. Everything that you should have done on your W-4. So you should already have everything squared away. All right. And since you have to wait until you have your W-2s or your 1099s, all that information should already be there for you. Okay. So you're going to come to this page, and I would suggest you do the lookup tool. Okay. And it asks you some questions to help you decide how you're going to do your taxes. This is where you need to be honest about how you're actually going to file, not withholdings, how you're actually going to file. So I actually file married filing jointly, okay? And then the person who you list first as the primary taxpayer, myself or my spouse, is usually whoever makes more, all right? So I'll say my spouse because she actually does make more than me. My spouse's age as of December 31st of 2020. All right, so her age was 36. My estimated gross income. All right, so this has a whole bunch of stuff on it. Most of us right here is this one. All right, pre-tax wages, salary, or tips. Okay, so I'll say 53,000. Do I have any pre-tax contributions? You'll know if you have these. Most of us, if you're working a full-time, you'll probably have at least maybe some kind of tax-deferred retirement plan, like a 401k. You have to say how much you gave in a year, so maybe that's $1,500. My health insurance premiums, another $1,500, which is probably too low, but just for the sake of argument, right? If you have, this is health savings account, FSA, I forget F. There's help, like you can figure out what's going on. All right. If you are self-employed, all right, you'll be in this box down here. Okay. So if you have self-employment, gross, which is before any deductions. All right. If you're self-employed, hire a tax professional in your first year. I highly recommend, unless you're making like $5,000 and you're not making enough to make a difference. If you're making real money, if you're making like over $25,000, get some help. It's worth it. And as you go up, get help. Okay. Some of you might get a scholarship that has to be counted as income. Pretty rare, but it happens. You have to account for that, all right? But for me and for most of us, this first thing is going to be all we have, okay? Adjustments to that income. So like I'm an educator, so I can take educator expenses. The maximum is $250, so you can put $249. Interesting. Oh, that's per deduction. You can do, I think, hang on. Right? Is it going to get mad at me? Yeah. It's $249 per deduction. But doing more than one, it can get complicated. But anyways, that's because I'm an educator. I can take certain deductions, so I can do that. IRA is a certain kind of retirement. The health savings account, that are not included in payroll deductions, so that's something that wasn't deducted in payroll. Armed forces moving expenses, alimonies if you're divorced. Early withdrawal of savings, not going to apply to most of you. This is going to be stuff, if it's you, okay? And then other adjustments is just, do you have adjustments to make to your income? So here, my adjusted gross income, all right? So I said I make $53,000 a year. These are all adjustments. Right here it says my AGI, this is what I'm actually liable for to pay taxes on, is $49,751. I hit next. Earned income tax credit has to do with if you have a certain amount of dependents and how much you make. It starts out by asking you how many dependents under the age of 19 or between 19 and 23 if they are full-time students do you and your spouse plan to claim on your tax return. So I'm going to actually claim 2, all right, based on my input. So it's looking at my income and then how many dependents I have. It will say whether or not I'm eligible for an earned income tax credit. Basically, this is if you don't make enough money, you can get some tax credit. And tax credits is actually a credit against your actual tax debt owed. It's very powerful. It's much more powerful than a deduction. Okay. They say I'm not eligible, and they are right. I am not eligible. I know that. If you know otherwise, you can say yes, or you can go through an assistant to get it. State of residence, I live in Texas. Or military, including federal income tax fees, should apply. However, some companies offer free file. Anyways, it's talking about state taxes. Texas doesn't have any state income tax, so that's what it's. Wait, what? Texas. There we go. Military pay. Did you receive any military pay? So if you are active duty, yes. If you are a reserve, yes. If you are making disability, yes. Okay. Anything that comes from military, yes. I didn't make any money from the military this year, so I'm gonna say no. And then it gives me all of these offers. Okay. These are all the ones that the IRS recognizes. All of these are legitimate. All of these are fine. You can go. TaxSlayer, I know, is actually a pretty easy to use site. Really simple, very similar to some of the other options I'm going to show you. This is fine. All right. You can click view this offer. It takes you to the page, and you start your process with them. And it's going to say, like up here, it says get started. Blam. Click that button. You already know that you qualify because this IRS page told you that you do. Okay. So you're going to have to go through their process, but these say that it works. Okay. The other options that are out there that aren't listed here that I think are really good and viable. TurboTax, which you'll see it was probably an ad here. Yeah, first ad, TurboTax. Super common. Before I got married, I filed with TurboTax every year myself. It's super duper simple. Okay. It walks you through. So where is file my own taxes? There's got to be an easier way to do it than that. File my own taxes. Start for free. Okay. But you even see here, they have live experts that can help. We do our taxes for you. They do it. It just costs money. All right. So I can go for here. I can start for free. You select what applies. So you can be like, I have a job. I received a W-2. I own a home. I have children. I donate over $300 to charity. See, like you can see, like just what do you qualify for? I own a small business. I'm self-employed. What have you? Okay. After clicking these, it gives you some options. All right. Of course they're gonna tell me, do the deluxe. It's $60. All right. And in Texas, we don't have to worry about that state additional thing. We don't have state income tax. So they're going to recommend this. So like it says, like if you have investments in rental property, the Premier might be able to help you do it. It costs a little bit of money, but if you have these things, you probably have the money to spend $90 to do your taxes. If you're self-employed, personal and business income, $120 is not a big deal. Okay. Do these. That's great. That's cheap, and they can probably help you do it. And you can start your process for free, and it says you pay when you file. So if you get to the end of the process and you go, this doesn't feel right, you don't pay anything. Now you lose everything that you did, but you don't pay anything. Obviously, the most common, right, is this free edition over here for simple tax returns. For if you're a W-2 employee, which is what most of you are going to be for the first couple years of your professional career, this is going to be fine for you. File for $0. Let's go. From this point on, it's going to get into stuff that I can't get into without actually using it. But it asks you, like, how did you do taxes last year? If this is your first time doing taxes, I didn't file taxes last year. Continue. Now you're going to create an account with them, and you're going to move forward. Okay? Really simple. Works super well. Super duper easy. And for 99% of you, this is fine. Use this. Take that W-2 that your employer gave you, this guy right here, or your 1099s, load up TurboTax, or this is H&R Block's free online, which it should have appeared as well right there. There's H&R Block. So it was IRS, TurboTax, H&R Block. Okay? Go here, look at this, and make it happen. All right? It probably has a start taxes button. All right? just party. Okay, got to create an account, whatever, fine, not a big deal. Both of these are really user friendly and really simple to do, and I can't brag enough about how easy they are to work with. So, and then any of these I'm sure would be fine. I've never used them, but they're going to be accurate to say the very least, and they're going to be free for their basic assistance, which is good enough if you are a basic W-2 or have a basic simple like 1 or 2 1099s to deal with. You're probably going to be fine. Okay? This was long, really long, almost an hour. I hope it was helpful. There is a survey attached to the assignment in which you're going to basically say, was this helpful? What could have been better? And then a place for you to answer some questions or to ask more questions if you have them. Be sure, though, before you go asking a lot of questions, that you look at this site and make sure it doesn't answer your questions for you. If it does not, by all means, throw that question into the form and I can readdress them or find somebody else who can in a later lesson on taxes. Okay? So this has been an overly long lesson on taxes by Mr. R. If you have questions, leave them in the survey. What is due to your teacher is that completed survey and a completed model W-2, or sorry, W-4. You're going to give them you are going to fill out your own version of this W-4. Okay? So with all of that said, best of luck. And if you need anything, feel free to ask your teacher, myself, throw it in the survey. We're glad to help out. So y'all have an outstanding day, and I'll see you around.